Let's take an example of two people with the same annual income of 50,000 United States dollars per year, live in the same in the same city, Jin and Jun. After many years of hard working and saving consistently, deny many afterward invitation or weekend activities with their friends, finally they reach the milestone of 50,000 United States dollars in saving, which is an impressive number for young people in the current economic of this century. After doing research, according to multiple financial podcasts which analyze the investment on YouTube which encourage people to invest in real estate, Jin decides to search for buying a house in the region. The house has 3 bedrooms with the price of 400,000 United States dollars, which is 28 kilometers away from the city center. However, the public transport seems to be convenience. He put 50,000 as the down payment and leveraged the leftover by borrowing money from bank. Then Jin decides to rent the house out for a couple which seems to have a very stable income and being trust-able. The first month of the rent comes in, everything goes smooth. After paying the mortgage loan for the bank, he still has 100 United States dollars left from the rent. It sounds sweet like what is taught on Financial Wealth podcast. Jin feels happy as the good time will last forever. He drove to the office every day, passing by his rented house, feeling proud of his hard work. At the coffee time, people are talking about investment. He proudly shares his achievement, people nod along. Then directly shift their conversation to another. Unlike Jun decides to find a mutual fund and an index fund which track the movement of 500 biggest companies like SP 500. He lazily puts all his saving in it and sleep peacefully at night. The index fund usually have the average return of 10 to 12% in good economic. Therefore, each year, his investment increase around 5,000 United States dollars. He does not constantly check his investment but let the compounding interest do the heavy lifting. Sounds boring, sound less productive to other people. In some bad years where the economic resentment happens, the return is low, his investment portfolio is fluctuated. His colleagues laugh at him. However, he does not sell as his colleague refer him as a farmer mindset investor who does not understand trending investment like Bitcoin or rental property. Jun sleeps well every night, no matter what people said. Return to Jin's story. After the honeymoon phase, the house starts having issues. Firstly, the leaking water pipeline happens at midnight and the renters call him as they need water. He fixes it after work, tiredly. However, hiring a company which helps managing rental properties will cost extra money which he cannot afford. Then, some weekend, he has to visit his rental property to fix stuffs. Sometimes it is the issue with the drain sink which stuck, sometime the rooftop that has issue when a tree branch fall down after the heavy wind the night before. Now, managing his rental property is his second job. Fortunately, after a decade of managing his own rental property and do multiple jobs to fix everything by himself that drains his energy, the price of real estate in the region increased 15%. Now, his property worth is 460,000 USD. Finally, all his hard work pays off. Definitely, the real estate may increase value more in the future if he keeps it. How about Jun, as a child guy which receives multiple joke and criticism from his acquaintances, after the similar amount of time with Jin? His investment got fluctuated every year but the average return each year is around 8% during the period of 10 years. He got 108,000 United States dollars, less headache, sleep well every night. Basically, his investment is appreciated in the value of around 58,000. Definitely, we have not mentioned that he even contributed steadily each month which he saves from his paycheck. Two people, two different investment styles, they both end up with a sweet story as their investments increase significantly. Though the debate between these two investment style on internet never end, we could not decide which strategy is better. I think choose the one that fit your style. If you are an active handyman who is proactive in managing rental property and being a handyman who can fix the real estate yourself for cost saving, choosing rental property investment would be an optimized choice. However, if you are someone who is laid back and prefer to enjoy the compounding interest and let the time to heavy lifting work, choose stock market. How about you? What is your opinion on this matter? Which investment style that fit you? Comment below to let us know. Your opinion matters to us. Together, we can build a strong society that constantly sharing knowledge and learning together every day.